Hello. Welcome to JKO News, where you get more facts and less opinions. This is the Week in Review, for 16th to 20th of January 2023. This week, the rich, powerful and visionary met in Davos, Switzerland, for the World Economic Forum. If you ask me, nothing very useful came out of there, including the interviews that passed on the mainstream media. In reality, nobody can guess the future. There is a general optimism of the politicians regarding the economy. The stock markets have been holding pretty well, but both technical indicators and fundamentals point downwards. It's too soon for optimism regarding the monetary policy and economic performance. In case we don't have a soft landing, 2023 may be a rough year. Now, regarding economic data releases. Retail sales in the U.S. declined 1.1% month-over-month in December 2022, following an upwardly revised 1% drop in November and worse than forecasts of a 0.8% fall. Producer prices for final demand in the U.S. dropped 0.5% from a month earlier in December 2022, following a revised 0.2% gain in November and compared with market expectations of a 0.1% fall. It was the largest monthly decline since April 2020, adding to signs that inflationary pressure in the world's largest economy is cooling. On an unadjusted yearly basis, the PPI increased 6.2% in December, the least since March 2021. Existing home sales in the U.S. fell by 1.5% to 4.02 million in December, the lowest level since November of 2010 but slightly above market forecasts of 3.96 million. It marks an 11th straight month of falling home sales, the longest stretch since 1999, as buyers continue to face limited inventory and high mortgage rates. Now, let's take a walk around the markets. WTI crude futures stabilized around $81 per barrel on Friday and are on track for a second consecutive weekly gain, supported by an improving demand outlook and persistent supply worries. The International Energy Agency said global oil consumption would reach a record daily average this year as China opened its economy. At the same time, the IEA also warned that price cap sanctions on Russia could dent supply further. OPEC echoed a similar view in its monthly report, saying that demand for crude will rise by 2.22 million barrels per day, that is, 2.2%. On the supply side, OPEC Plus decided in December to stick with their policy of restricting global supplies by 2 million barrels per day, a move due to run through the end of 2023. U.S. natural gas futures closed on their lowest level since June 2021. According to the Energy Information Administration, U.S. natural gas production is likely to grow more than 2% this year. At the same time, AEA data showed that utilities unexpectedly injected 11 BCF into storage last week. The Freeport LNG export plant in Texas, forced to go offline in June following a fire, again delayed the restart to the second half of January, leaving more supply on the domestic market. Still, Arctic weather will move into the United States next week, resulting in below normal temperatures, which could boost demand for heating and push prices higher. Regarding the U.S. stock market, the Dow added more than 300 points on Friday, while the S&P 500 and the Nasdaq 100 were up roughly 1.9% and 2.7%, respectively. Mega-cap companies, including Meta, Amazon, Microsoft and Tesla jumped between 1% and 5%. Alphabet was up 5.3% after announcing that it will cut 12,000 jobs. Netflix soared 8.5% after reporting stronger than expected subscriber numbers. On Friday, Fed Governor Waller backed a 25 basis points interest rate hike for the next meeting. Comments from Federal Reserve officials have shown to expect interest rates to climb to at least 5% this year to tamp down high inflation. Next week, investors' eyes will be on earning reports from Microsoft on Tuesday, Tesla and IBM on Wednesday. Bitcoin traded at $22,821 on January 22. Over the last 4 weeks, Bitcoin gained 35.73%. Over the last 12 months, its price fell by 37.09%. Gold held above $1,920 an ounce on Friday, hovering near its strongest levels in 9 months. The metal is also on track to gain for the 5th straight week. Markets are currently expecting the U.S. central bank to downshift to a smaller 25 basis point rate hike in February. Gold is highly sensitive to the rates outlook as higher interest rates raise the opportunity cost of holding non-yielding bullion, and vice versa. Spot silver held above $24 per ounce, not far from a near 9-month high of $24.50 touched on Monday, amid a weaker U.S. dollar and expectations of a slower pace of Federal Reserve rate hikes. The investment demand could weigh on the commodity price. Next week, in the U.S., there will be releases including the Q4 GDP growth rate, durable goods orders, the PCE price index, personal income and spending, and earnings reports. Also, flash PMI data for January will be published for the US, UK, Japan, and Euro area countries. If you enjoyed this video, don't forget to like and subscribe to this channel. The content of this video is for information and education purposes only. The viewer is advised to verify the information using the cited sources.